Hey, folks. Welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, December 21st, 2009. Well, folks, as you gaze upon the SPY, which is mirroring the S&P 500, you can see we are up on the day, and up decently at that. If I look at the Dow, we see the Dow is up about 100 points, NASDAQ up 24, and the S&P 500 up about 12 on the day. Now, the key is here, that's basically a 1% gain. Some of the leaders that are running this market higher today would be Alcoa. Alcoa, after a deal with Saudi Arabia and an upgrade over the weekend, you can see here a nice pop on Alcoa, up $1.20 on the day, and that is slightly off the highs of the day. Other stocks in play today, you can take a look at Amazon. Amazon is having a nice day. I talked about this on my weekend video, folks, expecting it to run up today based on the fact that that blizzard hit everywhere from really North Carolina, D.C., all the way up the East Coast, north, and that really made a lot of these people have to go online to buy Christmas presents and holiday presents. So with that, I expected Amazon to have a good day today. It is having a good day. In addition, if you want to take a look at a couple other leaders, you can see Apple Computer is having a nice day as well. AAPL, just off the highs, is coming back in. Actually, a little bit of a micro bearish pattern here. Now, the key on Apple, folks, and I want to do a couple of little tidbits of analysis for you guys before we get into the S&P. But one thing you can see on Apple is it actually hit this high, and this was called out in the chat room for a high double top for a certain reason. And I want to make sure you guys are aware of why I decided to make that analysis point to the Research Center subscribers or to the chat room subscribers, why I do my plays that I do. And number one, you have to look at the 60-minute to see this. But what I loved about this chart, and I even posted it on the free Rant and Rave blog today, so you guys can always follow it on the blog. But this point, see this high right here going back to the 10th of December? Right there, if you take that high, notice how the high was hit there beautifully and touched, and then look at the selling that's come in on Apple. And that's just, you have to understand the play here. It's not merely that it's a double top. I mean, yes, the fact that it hit this green line that I just put in is key because it's a double top, but please don't underestimate the fact that it had to pierce a 200 moving average and get through it intra-candle and touch that double top. Whenever you have two things telling you that they're major resistance in this area, it's always a way better shorting opportunity than just one. So a double top is a great short, but if you add in the fact that it had to pierce that 200 moving average, that's always going to add to the percentages of winners. So I look at that play right there when I talked about it to the chat room this morning, saying, listen, this could be a pullback candidate, and sure enough it did, basically $2 off the high now. I said to them, guys, realize what's going on here and see the two things that are going on here. This will pull back, and sure enough, Apple has pulled back. Now, Apple's still up nicely on the day, don't get me wrong, but off that 199.75 level, that was the no-brainer right there, folks. That was your shorting opportunity of the day, essentially, on any of the major stocks we touch on. Now, some other stocks in play today that are having good moves, you can see here, I'll switch to the intraday chart on Goldman Sachs. Goldman Sachs is having a nice little up day, up about $2.95. Also, if you take a look at JP Morgan, up about 94 cents as well. Now, JP Morgan, like Apple Computer, which I just showed you, does have a little bit of a bearish pattern in here. There is an in spirit of bear flag developing here. I just don't know if there's enough volume in the market this afternoon, and there it is right there, to cause a rollover in this market or in these stocks. So again, there's JP Morgan. Let's take a look at Apple again. There you can see Apple down, sideways consolidation. Now, normally this would be a high percentage shorting opportunity to the downside, and it may work out. But just, one thing I do like too is the 20 is curving over to put some pressure on it. But my point again is that volume has really died out this afternoon. As we get into later sessions of this week, unless you have geopolitical stuff, you have some economic. Actually, there's a lot of economic news, but it's all in the morning sessions. So again, by the afternoons of this week, you will see a lighter volume trading environment, and that's what we're seeing today essentially, folks. Okay, so just be aware of that. But right now, Apple's on a little bit of support right here, but a bearish pattern intact. And you can see right there's your sideways consolidation after a little bit of a drop. Now, Google continues to trade just below 600. 600 was pierced last week. We called that as an even number play. Even number play is a key coin term and play or trading play or swing trading play, actually, on stocks out there in markets. And sure enough, utilization of that would have given you the perfect shorting opportunity on Google. And it pulled back, obviously, back underneath that 600 mark. So 600 will remain resistance on Google as well. Watch it closely. It could go as high as 605 or so. I would even think 607, 608 is a possibility. But that's not much for Google. That's a couple dollar move on the day or on a week period over the next 2 weeks when we have some holidays. Now remember, this week there's a lot of economic news. It's all crammed into really Tuesday, Wednesday, Thursday, because Thursday's a half day and then Friday the markets are closed for Christmas, the Christmas holiday. So be aware of that. trade accordingly to understand the lighter volume environment. Let's go back to the SPY here as well, folks. Here's your SPY. You can see there's actually that little bit of a bearish pattern in the spiders too, but again, it's a very light trading volume here. Down move, there it is. Down move, sideways, inside bars, sideways right there. That's in spirit of bear flag pattern. Note here how you have the key level of 111.50. For those of you that are premium subscribers, you understand the significance of 111.50 in this market. 111.50 has been a key level probably for a month and a half now that we've talked about. I love how you got above it here, but didn't confirm, and you saw a pullback. Then you got above it here, didn't confirm, and then you're seeing a pullback. So you can see that 111.50 working beautifully. In addition, what I also like is we did get above this blue trend line, and you did confirm it, right? Here's a close above it. Here's a second close above it. Therefore, that states, based on the in-the-money stocks confirmation play, that there will be significant support right at this blue line. Sure enough, look, boom, boom. Bounce off of it, goes up, comes back down, bam, again, bam, again. Now, each time it hits, it gets weaker and weaker, but ultimately it shows you how that confirmation signal works so well to our premium subscribers and how it's been able to utilize to maximize profit across the board on all trades, whether it's Forex, stocks, bonds, ETF, whatever. There's anything that can be charted can literally be utilized with this confirmation play. All right, so there's your small in spirit of bearish pattern. You can see just as I say that, the market's trying to tick down here and break this blue line based off that bearish pattern. If you do break it, guess where you're going? Right here. This is exactly where you're going right here. All right, 200 moving average will be another level. You did confirm above that as well. Therefore, this 200 becomes support. If you get through that, you're going to go all the way back down to where we opened today, right around this 110.80, 110.85 level. And again, that'll be what you're looking for overall. Now, again, we'll see where this market trades into the close. Those are your support lines below. Resistance on the upside, obviously the 111.50 is very, very important because you haven't been able to confirm a break through that. If you get through that, you'll have a little pivot high, double top right here at 111.70, 75, and then ultimately the 112 level is really the big one that you watch for. A break of 112, you look to be able to short that intraday as well and have a nice little pullback. Okay, 60-minute chart. Let's quickly touch on the 60. Here you can see beautifully the lines. These are your 60-minute key lines. Here's the Great Wall of China upper level right up here at 110.34. That's where we closed right under. Today we gapped above it, and you really gapped right to this 110.80-85 level and pushed all the way up. You can see this line right here. You pierced it on the first candle, then pushed through it, then pushed through it again, made a nice little tail up here, and then pulled back to that line. So again, you can see how confirmation is even working on the 60-minute. Here's your close above. Here's your secondary close. That tells you that this point right here will be support, and sure enough, we pulled back right to that support line now. So very, very interesting to note that as well. That seems to be, let me just go over a couple other things. One thing I want to go over is the hidden gems from November continues to rock, guys. The hidden gems are really fantastic. They continue to be unbelievable in the return department. Today, we saw the November hidden gems hit a high of 209. That's from the 155 alert in November. And again, just 6 weeks later or so, you have literally a 35% gain on your hands on a small cap. And the market hasn't even gone up or down. It's basically been chopping, as you can see here on the intraday, chop, 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 chop. And sure enough, the hidden gems continue to outperform and really return some fantastic gains. So again, we'll see how those play out. But nonetheless, some unbelievable moves across the board on the hidden gems. And again, January is coming soon, folks. Be ready for the hidden gems play coming up, which will be released in early January. Watch for that. It will be a big one. I've already got a couple things on my watch list that I'm doing due diligence on to bring you the best one that should give you that 50% gain as we give the overall target for 50% on the hidden gems. All right, folks, come join the research center. Come join the chat room. Enjoy the free Rant and Rave blog. It is on our website, inthemoneystocks.com, and we look forward to having you with us. Take care.